Okay, we are just getting started. Hello there. I'm Mitch Goldberg. You're watching your post-market show where we talk about personal finance, investing, credit, home buying, insurance, you name it. If it has something to do with money, we want to talk about it here. The show is all about education, making you smarter with your money so that you can make the best possible financial decisions for you and your family's financial future. That's what it's all about today. We're going to go into a different direction today, and we could talk a little bit more about the market. The Dow is down again today. S&P was down today. By the way, you can't invest directly into an index, but you could invest directly into a security that tracks or mimics an index. But the markets were generally down today. NASDAQ was up a tiny bit, little bit of a bounce back in some of the bigger tech names like NVIDIA and Microsoft. But the point is, the downtrend in the S&P continues to be down. Not to beat on this with a dead stick. We talked about this endlessly, and it's important to take a look at a couple of things. But let's just take a look at how the major averages did. Dow down 150, NASDAQ up barely up 19 points. After the 4 point some odd percent drop it had yesterday, this is not much of a consolation prize for investors. S&P down another 14 points. Gold continues, okay? Continues to get hammered, okay? So let me just hold on. I'm looking at the wrong screen. This is what happens when I rush, okay? Just bear with me 1 second. All right. That's better. Thank you. Thank you. Okay, that's much better. Okay. Let's get back to the market, though. Okay, so stocks down, oil continues to go lower. Didn't help the inflation front. Nobody feels better with oil going down a little bit. The VIX was way up yesterday. Came down a little bit today, but very modestly down. You see that to 32. We need to see that get down to 20 to really have a good feel good moment in the market. But let's take a look at the continued bleeding in crypto. Yesterday, Bitcoin was off about 15%, down another 5% today, and Bitcoin firmly under $22,000. And as goes Bitcoin, as goes the rest of the crypto world. So we're not going to get into each and every one of these. And the last thing, two more things, and then we're going to get to something special because we're going to talk about mortgage rates, and holy smokes, did they go up. But this is the story of the day. This is the 10-year treasuries, the 1 month. I'm sorry. This is the treasury market, the 1 month, the 3 month, the 6 month, etc. The 10-year yield up to 3.47, so almost 3.5%. The 2-year, okay, at 3.43%. Those two yields, that one and this one, are very close. So it's still a very flat yield curve. Not a great vote of confidence for the economy. You've heard me say it before. I don't think we're heading into a recession. I actually think we are already in one. Maybe I'm wrong, but I think we're there already, and it's just starting to be borne out in the statistics. But that's the story of the day. The 10-year yield up to almost 3.5%. And ultimately, what does this come down to? This is what I wanted to talk to you about today. The 30-year fixed mortgage rate jumps to 6.28%. 6.28%. I mean, last week it was what, in the fives? 2 weeks ago it broke over 5, got up to 5.5, maybe down to 5.3. People thinking, no, that's too high. That's a really high yield. I'm going to wait until rates come down. And maybe sellers, home sellers, are thinking, yeah, I'm going to hold on. I'm not worried about it. I'm not worried about rates going higher and buyers seeing their ability to afford a home go down, because rates are high and they'll probably go down. And now they're 6.38%. So this is a big problem for the economy. But I want to know what this means for the housing market. Is it like lights out for the housing market? Does the housing market get crushed? Do sellers who are holding on to their homes lower their prices? I have a friend, one of my very good friends, Michael Wright. He's a realtor with Douglas Elliman. He's going to be on in a moment to give it to us straight. He's very experienced, well regarded in his industry. But I'm going to roll a quick intro, and then when we come back, we're going to have Michael on with us. So here we go. Michael, how are you? Thank you so much for joining me.
Thank you so much for having me, Mitch. It's a pleasure to be here.
Good. It's kind of like a momentous day because I feel like it's almost like historic. Mortgage rates
hmm
6.3, just about 6.3%, and that is a bit of a shock to see mortgage rates head above, appreciably above 5.5%, let alone 6%. Uh, what does this mean for the housing market?
I mean, having interest rates up above six is definitely something we haven't seen in the last 10 to 15 years. Over the last 100 years, we're still kind of in that middle average. So even though it's double what it was just a few months ago on the historical trend, we're not like where we were in the 80s where interest rates were up above 12. um, so we're still kind of in that middle average. What it means for buyers is very quickly their buying power has been eroded, by that 1 point increase. So they can now afford a little less. So what does that mean for sellers? Um, for sellers, they're still in a pretty good spot because the supply demand ratio is in their favor. There's still a lot more buyers out there than there are sellers.
So what's more important, uh, the low, which is a stronger force, the low inventory keeping housing prices high and steady, or rising mortgage rates sapping affordability and possibly pushing down the value of homes?
That's a great question because across the country, based on, I mean, this data is a little dated, but based on the demand just a few months ago, the United States was short 4 to 5 million homes
I
based
saw
on
that.
that demand. Now, if the demand changes, then if we're going through the recession that you're saying we're in, and people start to be less financially secure and not in a position to buy homes, then that demand for housing gets reduced. Um, so maybe we don't need to build 4 or 5 million homes. Maybe we're still short by 1 or 2 million, or maybe even 3 million. We're still short on homes. So when there's a demand for homes and not enough supply, the prices are going to continue to go up.
Now, I realize all real estate is local, and I appreciate the very broad, you give me the broad national picture, and I think maybe in another life you were probably a real estate economist because you know all this stuff. But a lot of localities are similar, whether if it's Florida, California, New York. Sellers put their houses in the market, and I think what is the average length of time that a house is on the market before it goes to contract? Is there a number?
Sure. So on Long Island, I mean, we'll talk Long Island quick. Typically, so on average, right now, the absorption rate, which means if no more houses came on the market, how long would it take to um, the existing homes on the market to be sold? And we're just at around one, a little over 1 month, which is really low.
A
So
one
a
month
balanced
supply.
market, was that
A 1 month supply.
correct? 1 month supply. So a balanced market is actually about a 6 month supply.
Okay. By the way, for everybody watching, if you would give us a thumbs up, a reaction, a laugh reaction, a wow reaction. I see you. Candace gave us a wow reaction. Thank you very much. A heart, whatever. Let us know you're out there when you like this, or give us a reaction. It helps spread the good word to other people on your timeline. And if you have any questions for myself or for Michael, hit us up in the comments. We would love to hear from you. Answering your questions is the best part of doing this. And your questions, if you have a question, probably others have it also. Words of wisdom and words of encouragement are always appreciated. I see my daughter Jess is watching, and Jay is out there. And if it's okay, I just want to put this one comment up. I got a hi daddy for my daughter, which is
Uh,
always nice. Yeah, we're going out to dinner tonight, sweetie. Okay. Rita is out. Hey, Rita, thank you so much.
so maybe
It's
get a
great to
little bit
see
more
you.
granular with that answer. If you listed your house, let's say going live, starting showing this weekend, if it's priced and marketed effectively, you could receive multiple offers. You're still in that time frame where you could receive multiple offers over the first few days of showing the house. Sellers that have been getting kind of a little bit more charged up, a little bit more amped about what they could possibly get for their house. If they list their house too high, those houses are actually sitting for 2 to 4 weeks, if not a little bit longer.
Yeah, it's all about the price.
Yep.
I mean, let me ask you, as a realtor, you sell houses, and I think you've completed over 100 transactions,
Hmm.
which puts you in like the upper echelon of realtors. Uh, do you get a lot of pushback from sellers, or are you getting more pushback? Like, are you saying to sellers today, if somebody was to list a similar house that you sold 2 months ago, are you coming into their home and saying, giving them or suggesting the same price as the same house 2 months ago? Or are you saying, maybe we need to list it for a little bit less because buyers are getting scared away because of the rising cost of mortgages?
Yeah, I would actually. That's a fair point. I would actually decide to price it or suggest to price it slightly lower, um, because the reality of the situation is right now, because the market is still in such the seller's favor. If I'm wrong in what the value is, I'm going to be wrong on the low side. So what's going to happen is if I'm low, then there's going to be multiple offers. We're going to ask for everyone's highest and best offer. These buyers that have been in the market for 4 to 6 months
And it'll be bid up. If your price is too low,
understand
it'll be bid up.
exactly. They understand what the house is worth for them because they've been in the market. They understand the value of a home for them, and as long as they're competing with at least one other offer, they're going to give us their best number. So I'd rather be wrong on the low side than on the high side.
Okay. And as far as now goes in reality, getting away from hypotheticals, are I read like 2 weeks ago somewhere, probably on CNBC, that sellers are starting to get a little antsy with the with the rising rates, and they're looking to maybe list quicker or not hold on as long, and they're not waiting for prices to go up. Do you see that? Is that showing up? I guess if I read about it, maybe it showed up in the data, but do you see it in real life? Hashtag IRL.
So it's interesting. I mean, if you think about it, there's been this bottleneck of kind of the my mother and father's generation, that own four bedroom, 2.5 bath colonials that have had thoughts of selling maybe 3 years ago. They were getting the house ready, and then the entire world shut down. And because they're at more of an at-risk um, age bracket when it comes to COVID, they just shut the door and said, you know what, we'll sell when this thing is over. And as hopefully COVID continues to be in our rearview mirror, they're like, oh wait, we're like this house is way too big for us. Our kids are in college, out of college, they're not coming back. Why are we still in this house? Weren't we going to sell this 2 years ago? And that's really kind of where the bottleneck is, and why like first time home buyers, they buy, 2 3 bedroom, maybe 1 bath starter home, and they move up to a kind of a trade up home, like a 3 bed 2.5 bath ranch, or split level. And then those sellers then go
Yeah,
to your forever home, which is like the 4 bed two
right.
and a half colonial. And then those sellers typically either
Yeah,
downsize.
it's the move up buyer. The first time home buyer buys something small, affordable. Then they move up into the bigger home as their kids get, yeah, as their family grows, or if they want a better school district, they want more property. Sometimes people move up to an even bigger, quote unquote, better house after that. And then people sell their house as they age. Their kids are out of the house. They no longer need the school district, and they want to scale down. When you see people scaling down, I'm talking about the baby boomer age seller. They're listing their house. They sell it. are they going when they go into a smaller home? What I'm thinking it was like a condo. Okay, are they taking mortgages or are they plunking all the money down and just buying the houses for cash?
A lot of them will actually like so. I mean, you're the financial guy. I would imagine, depending on depending on their financial position and their other investments, if they can make more in the market in a safe manner than they're paying an interest, they should get a mortgage. Um, so it's kind of a 50-50 split. Some buyers tend to just pay for it all cash and say, I'm done with having a mortgage. I don't want to make a mortgage payment
Yeah,
anymore.
I
Others,
I would think if you're getting 2 or 2.5, 3% cost of money, you're going to take a mortgage, and that's what I see, and I think that's a fine strategy. When rates are now 6% plus, at that point, people are saying, you know what, I don't even want the mortgage anymore. The interest is too high. I'm just going to pay cash. But that's shifting. But my big question is this: real estate is local. It's affected by inventory. It's affected by interest rates. It's affected by real estate taxes. It's affected by you know school districts. So many things. Proximity to transportation. So that's why real estate is so local. You can't just compare a house in the suburbs to a house in a rural area. But I just can't get this out of my head that with rates at 6.3% today on a 30-year fixed. When I saw that today, and it takes a lot to shock me, but when I saw the jump in rates today, I was like, I thought to myself, holy shit, this is crazy. And do you think like a seller of a home, a boomer seller who wants to get out, is thinking this just like killed the affordability of my home to an awful lot of people? Maybe they're getting a little nervous. Is that possibility?
realistic.
I really want prices of houses to go down. Okay, what can I tell you? I'm trying to guide you into saying what I want you to say, but you're just not doing it for me, man. You're,
I'm
you're too
sorry.
professional for that. You're too good for that.
Supply and demand is just too strong in the seller's favor for me to tell you that prices are really going to drop or fall off a cliff. We don't have. Everyone thinks, oh, like the economy is going down, the stock market's going down, we're going in towards recession, rates are sky high. We're going to see this bubble burst because that's what they remember in 2007, 8, and 9, just the collapse of the whole world economy. But if you look at what led up to that and the fraudulent lending and just the mortgage-backed securities that were being traded, it really just it's not going on right now. So that what caused the implosion before is not going to happen again. So prices will, I believe, level off towards the end of the year as demand decreases and supply slightly increases. But I think inflation is gonna kind of cradle home values, and we'll get back to that steady, healthy growth of maybe 3 to 5% a year come 2024 into
Mhm.
2025.
Well, that's a good point. Well, now you're talking to me about mortgage-backed securities. You're kind of, you're running in my turf there.
All right.
All right.
I
So,
watched The Big Short too many times.
okay. Well, agreed. The banking sector is so much stronger now than in '07. I mean, I've what I've been saying to people is that you're not going to get a repeat of '07, '08 and see like you know a 20-30% plus drop in the price of houses. That was a different circumstance, and you could see prices level off, stop going up, in some cases maybe go down a little bit, but by and large the millennials and the zillennials behind them are home buyers, and they want to have families,
Yeah,
and they need the house. And I guess we have to agree that I don't see any other way we could agree on anything, because this is the fact. There's still an inventory shortage, and it's just too bad. So, what do you tell a first time home buyer? Like where we live on Long Island, you know, first time home buyer, it's like, do we have first time home houses in inventory?
yeah. It's so you have to be realistic with what you're looking for. So when I'm talking to a first-time home buyer and even a trade-up buyer, the philosophies are the same. When we start a home search, first thing we do is nail down your budget, which includes not only your down payment, your monthly payment on the mortgage, but also the property taxes, because those three things together define exactly how much your monthly payment can be, and also how much we can spend on a house considering that specific house's property tax value. So we'll call it the price. And the second thing we look at is location, because a house in Rocky Point isn't going to be the same as Sayville, isn't going to be the same as Glen Cove, isn't going to be the same as Merrick or Belmore. So the location matters, and houses of the same. So that brings us to the third piece of it, and that's the house itself. The house itself, the number of bedrooms, the number of bathrooms, whether it has a basement, garage, deck, pool, how big is the property. You can pick two of those things. So we have price, we have house, and we have location. When you select two, that dictates the third. So we have to first determine like the price. I mean, that, especially when we're talking with a first time home buyer, that's going to be dictated by how much money they make, how much debt they have. So that one's like a given and kind of a fixed number. Then they have to decide what's more important. Is it location and maybe the commute to work, maybe the school district, close to friends or family, maybe the downtown, whatever is more important to them? Or is it the house that they're actually living in and spending time in and where they're going to lay their head? Do they want something that's a fixer upper? Do they want more space? What's the drawing factor? Are we focused on location or are we focused on price? And then once we determine kind of the price and then either the location or the house, we go out and we take a look at what's on the market.
Do you see a lot of uh, first-time home buyers buying houses further away from work because they expect to telecommute at least part of the week?
Yeah, I'd say probably maybe 40 to 50% of buyers are looking a little bit further out, saying, okay, I'm going to be expected to commute into the city 2 times a week as opposed to 5 times a week, and
That's a
maybe
lot.
they're
40, that's a big percentage.
yeah, so maybe they're okay with an hour and a half or a 2 hour train ride as opposed to before if there were only 5 days a week, then they were like,
Yeah.
all right, 110, I can't be east of 110.
It could still be the same amount of time commuting. They'll just cram it all into 1 or 2 days a week instead of 5 days a week or something, right?
Mm-hmm.
All right, listen, we've got a few people out there. We have Josh is out there. Okay, you see that? Are you sure Mike wasn't a silverware general in a previous life?
I'm
But
not
that is
sure.
between your beard and like the hairstyle, you definitely have you got a whole classy thing going. I feel like you could do like a Johnny Walker whiskey commercial, Johnny Walker
Okay.
Scotch, excuse me. All right, Jay has a question. Do you think we're still in a demand chase? If so, where does it stop? I think we answered that question, but I think we want something maybe more concrete and more specific.
When will the market level out with a balanced number of buyers and sellers?
Mm,
I'm going to say if I had a crystal ball, maybe summer of next year. Um, I think the spring, but I would say spring, early spring, if seasonality wasn't part of the equation, but because spring is such a hot market, a lot of sellers decide to list their house in the spring. A lot of buyers decide to buy a house in the spring so they get ready for the next school year. Um, so there's going to probably be a flurry of activity next spring. People that are kind of like, oh yeah, shoot, like we wanted to list our house this spring somehow or another. Everything bloomed late this year.
mm-hmm.
So maybe they'll do it later on this summer, looking forward to the fall. That's the second busiest time of the year. But I would think,
All
as
right.
we approach summer of next year, we're going to be in a more balanced market.
Okay. So maybe next year. You said there's a lag. We were talking before we went on live that there's a lag that interest rates go up. How does it affect prices? It's not going to affect prices in the pipeline, and you said it could take a month, or we could maybe see it in September. But my thing is, I guess what I want to ask you is, you're not a mortgage professional, but you obviously know a lot about mortgages. The housing market revolves around mortgages.
Mhm.
What do you see banks, mortgage banks, saying to their applicants? Hey, we said you could afford X amount percentage of your income, uh, and it's still the same, but since the rate is up, we can't give you as much because the
If you have a pre-approval from yesterday, I would suggest getting an updated one because your affordability has changed. Um, Now, the mortgage market tends to be very reactionary. So, maybe don't do it today. Maybe if you like, obviously, if you're interested in making an offer on a house, you need to do it today or over the next couple of days. But maybe wait until next week. Maybe it'll come back down, a quarter of a point or so. Um, yeah, as interest rates go up, your affordability and what you can spend on a house goes down.
this is just so bad for the first time home buyers. This is just I mean, I looked at this number at 6.3%, and I'm like, I could literally vomit. It's so horrendous. Look, it's the market that's setting the interest rates, and I'm a capitalist. That's the way it should be. I just feel bad for first time home buyers. It's like, if housing affordability wasn't great at a 3 or 3.5% mortgage rate, what's it like at 6.3? Pretty bad. Rihanna's out there. This is very informative. 100.
I,
Thank you,
I
my
always
friend.
like to I always like to say, and hey Rihanna, or Rianne, I always like to try and see the other side of the coin. And I don't follow politics at all, but from an economy standpoint, if the Fed didn't raise interest rates as aggressively as they did, we would be in even worse inflation, and it would be worse for everyone. So yes, I empathize with the first time home buyers, and that's a large part of my business. We still do, and we will find you a house. It is more challenging. That's no doubt about it. But it would be a whole lot worse if the Fed didn't take the unfavorable actions that they're
Yep,
taking.
I agree. Of course, you could also say it might not be as bad had the Fed not done all the programs it did. But look, it's all a big experiment.
Yep.
Getting out of the Great Recession took years and years, quantitative easings. We go into the pandemic, So Rianne says, I learned a great deal from this session. Thank you. Well, that's definitely the purpose of this. And you just made me super happy, Rianne. Thank you. I love to hear that. Thank you. And Alan is out there. Great discussion, Mitch. And kudos to Michael Wright. So, Mike, where could people reach you if they want to talk to you more about buying a house
So
or selling a house?
yeah, Michael Wright, realestate.com. Maybe we could put my info on the chat as well. Is that something we can do?
Yeah, let me see if I could pop you up in the in a banner. Okay.
My number is 631-258-2820. That's 631-258-2820. And it's michael.wright at element.com. And whether you're interested in buying, selling, or just talking real estate, my phone's always on. Oh, perfect. There you go.
Okay. Look at that.
Thank you so much.
631-258-2820. There are people in my circle who are looking to buy a first time home. Please call Michael. Michael once gave himself the moniker of the South Shore Realtor. This is not the first time you and I have made some content like this to talk about the housing market. So anyway, thanks so much. Who else is out there? Just give a couple of shout outs. Ellen, Eileen is out there. Thank you. Tyler, Jolie, Jay, Jess, Rianne. and Candace. Thank you all for joining us. Mike, I'm going to end it here, and I will speak to you in about 5 minutes to talk about how great we did today, okay? Thank you very much, buddy, for coming on.
Fantastic. You're the best,
All right.
man.
Goodbye.